Hey everyone, it's been a wild few weeks. We've seen Israel and Iran exchange missile strikes, and now the U.S. has stepped in with direct military involvement. That kind of escalation sends immediate shockwaves through the global economy. Oil prices are spiking, stock markets are jittery, and inflation fears are creeping back in. So today, let's talk about how to protect your money when there's war. Real, practical money tips for uncertain times. Let's start with something simple. Don't panic sell. When markets drop suddenly because of a geopolitical event, it's natural to feel anxious. But reacting emotionally often leads to bad financial decisions. If you sell during a dip, you're locking in losses. History shows that markets usually recover once the initial shock passes. If you're investing for the long term, the best move is often to sit tight and ride out the storm. Next, build your emergency fund. War, especially one involving oil-producing nations, can raise prices across the board. Gas, groceries, electricity, everything starts to cost more. Having 3 to 6 months worth of expenses saved up in a high-yield savings account gives you a buffer if inflation climbs or job security takes a hit. Peace of mind during a crisis is priceless. Third, diversify your investments. Conflict affects sectors differently. Oil and defense stocks might climb, while tech and tourism could suffer. Spread your money across different industries and asset types. Include a mix of stocks, bonds, maybe some commodities like gold or energy-related assets. Diversification helps you avoid big losses when one part of the market takes a hit. Keep an eye on commodity prices. Oil prices are sensitive to Middle East tensions. As they rise, transportation and manufacturing costs go up, which means higher prices for everyday goods. If you drive a lot or run a business, consider ways to reduce fuel use. And if you invest, maybe look into assets that benefit from rising oil prices. Just remember, those can be volatile too. Also, this isn't the best time to make big, risky purchases. During wartime, supply chains get strained, prices go up, and interest rates can shift quickly. That new car, big vacation, or home renovation might cost you way more than expected. Unless it's absolutely necessary, it's smarter to delay major financial commitments until things settle down. Don't forget about currency fluctuations. In times of conflict, people often move their money into what they see as safer currencies like the US dollar. That can cause other currencies to weaken. If you earn money abroad, do business internationally, or travel often, even a small exchange rate change can affect your bottom line. Stay aware of where your money is going. Lastly, stay informed, but don't get overwhelmed. Yes, the news is intense. Missiles, sanctions, alliances shifting, but don't let it paralyze you. Set aside a few minutes a day to check updates from trusted sources. Focus on information that helps you make decisions, not just headlines that stir fear. The more you understand, the better prepared you are. To wrap it up, here's your action plan. Don't panic sell your investments. Build or top up your emergency fund. Diversify across sectors and asset types. Watch commodity trends, like especially oil and gas. Avoid big financial commitments for now. Monitor currency shifts if you deal internationally. Stay informed, but focus on what you can control. War affects more than just politics. It impacts your wallet, your job, your future. But with calm thinking and smart planning, you can weather the storm and maybe even find opportunities in the chaos. If you found this helpful, hit like, subscribe, and let me know in the comments what's one financial move you've made to stay ready in uncertain times. Stay safe, stay smart, and I'll see you in the next one.